on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused. I see Africa. I see Africa. I see an Africa that's global. I see Africa. I see Africa. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa going Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused. I see Africa. I see Africa. I see an Africa that's global. I see Africa. I see Africa. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused. I see Africa. I see Africa. I see an Africa that's global. I see Africa. I see Africa. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused. I see Africa. I see Africa. I see an Africa that's global. I see Africa. I see Africa.
Right. Thanks a lot, Raf. And essentially, like you said, it will be a very brief presentation. Now, what we intend to do at this stage is to try and point ourselves to what is happening on the market.
Hello, Courage. Can you hear me?
Yes. Can you hear me, Raf? Hello, Raf. Can you hear me?
Yes, please, I can.
Sure. So essentially, this presentation will be very brief, a brief one in which our attempt to answer two important questions. The first one being, we have seen in the past few months a declining trend in interest rates on government securities. So the first question is, why are interest rates on government securities declining? Then the second question is this sustainable into the year and beyond? So those are the two questions that this presentation will seek to find answers to. Now, to take us back to last year, about this time last year, we recall that interest rates on government securities came down sharply in the month of March, to be specific, where we fell from a peak of 35% across the T-bills to between 18.5 to around 26% across the T-bills. What we noticed is that almost immediately, it started to go up again and went back up towards the 30% handle. Why didn't it continue to decline? Now, the reason is because at the time interest rate declined so sharply, inflation was high, in excess of 40%. And we recall that interest rates are a compensation for the risk or the cost that is imposed on the value of our investments from inflation. So if inflation is high, investors would typically want to demand higher compensation for their investment. And so because inflation was quite high and even went up at some point in the year, interest rates started to go back up after the Treasury tried to reduce it in March. But why are we now seeing it decline? Then it goes back to the first answer, inflation. Over the past few months, we have seen, in fact, from last year, we have seen a sustained decline in inflation so that it has dropped very fast to the 23% area. Now, never mind the fact that it went up in January this year, but if you look at where we came from last year to around 23% so far, it's a very sharp drop. And that drop is being explained by the orange line in the first graph to your left. And you see that sharp decline in inflation, and to the point that it is now below the other lines. Those other lines, which is the green line and the blue lines, are the trend in interest rates on government securities. Now, inflation initially was above them so that you were getting negative returns when you take out inflation from the interest rate. But so far, inflation has fallen sharply below those interest rates. And because of this fall, which is so sharp, if you take out inflation from what you are currently earning on investment in government securities, it is now in the positives, ranging between 5% to about 8.5% if you take out inflation from what you are currently earning on T-bills. So the Treasury has seen that and has decided that, okay, now inflation, which is a risk to your investment, has come down sharply. Let's start to reduce interest rates. And the market has also bought into that idea because, after all, one of the risks to our investment is going down. And that is one of the explanations for why interest rate has been coming down in the past few months on the market. The second reason why inflation and interest rate is coming down is what you see in the graph to your right-hand side at the top. Now, the main explanation from that graph is that the amount of or the volume of Ghana cedi supply or liquidity on the market is quite strong and has gotten even stronger in 2024 so far. So you notice that there is an orange line in that chart, and then there are also blue lines. The orange line tells you how much government comes onto the market every week to raise, and the blue lines tells you how much investors actually attempt to give to the government. Earlier, from the left-hand side of the chart, you will see that the blue lines are above the orange line, but the gap between them is a bit narrower than when you compare it to the right-hand side of the extreme right of the chart, where the gap has widened. The blue line remains above the orange line, but the gap between them has widened. What that tells us is that investors' demand for government securities has increased significantly because there's so much supply of Ghana cedis on the market. And so they are buying a lot of government securities. And that is why you see that gap widening. And the average demand for government securities on a weekly basis is now about 5 billion cedis every week, compared to about 3.5 billion cedis averagely in the fourth quarter of last year. Now, when you supply a lot of money on the market, local currency on the market, interest rate is the price of money. So when supply of an item increases, the price falls. And so that is why we are seeing a decline in interest rate, because there are more people giving government money that the government is targeting to raise on the market. On the back of that, the government is then saying, reduce the yield that you're asking before I accept. And all that has played into why we have seen a decline in interest rates on the market in the past months. So the second question, what is the outlook? Where do we go from here? The summary is that the general outlook for interest rates in the course of the year is to continue to decline. Now, what are the factors that will support this continuous decline? Now, to also emphasize that it doesn't look like an every week of decline. You could find situations where there might be surprises here and there because of the risk to the outlook. And so you might see a pause at some point. You might see a slight uptick in the very unlikely event. But then the general trend to the outlook is that we expect it to continue to decline from this level that we are in. One of the reason why it will decline is that inflation, which is one reason why it started declining. We expect inflation will generally decline this year. We've seen an increase in January. We could likely see a few more increases scattered across the year. For instance, our forecast tells us that it is very likely that the inflation for March, which we will know in April, would go up. And it might go up quite sharply. But then it will later return to a downward path. So that over the course of this year, we see inflation dropping to around 16% to about 17% in the high case. Now, if inflation drops that much to the teens, you expect that the gap between the nominal interest rate, which we have currently in excess of 27% and close to 30%, when you take out inflation of about 16-17%, you have your inflation adjusted interest rate increasing from the current levels. And the Treasury will continue to reduce that inflation adjusted return. And so you expect that as inflation falls, which means the risk to your investment is falling, then the compensation you earn also to compensate for that risk should also fall. So as inflation declines, we expect that interest rates will continue to decline and follow in that manner. But there are also risks to inflation, like the exchange rate pressure we are seeing on the market currently. If energy prices on the world market and on the domestic markets continues to go up, and it elevates inflation further as well. And also the strong volume of liquidity or CD supply we have on the market could also fuel demand pressures. But overall, we don't think that they will be strong enough to cause a reversal in inflation, that is to make inflation continue to rise instead of going down. The general outlook is that inflation will go down. And once inflation goes down, then there should be continuous decline or general decline in yields on the market. Finally, the second reason why we think that the outlook for yields is also to the downside is that we have strong volume of CD supply on the market. Our view is that the authorities, that is the policymakers, are intentionally keeping this strong volume of CD supply on the market to be able to support the government's borrowing requirements for the year. We recall that the government can no longer borrow on the international market. So the only market they have now to borrow is the domestic market. And in fact, even on the domestic market, the only segment of the market they have to borrow now is from T-bills. So the policy environment is being worked in a way as to allow the market to have sufficient volume of CD liquidity to allow government to be able to borrow to finance the budget deficit that they have for this year. So this means that with a strong liquidity going into the year and a strong demand for government securities, government also will be in a position to say, reduce the interest rate that you asked or you quote before I accept. And investors will also, on the back of declining inflation, holding other factors constant, be able to accommodate lower interest rates. And this will also keep interest rates on a downward path. But there are also risks to that, which would also mean that if inflation doesn't go down quickly and policy rate also doesn't go down quickly, or if government faces rollover risk or rollover refinancing pressure in the course of the year, and investors see that and get scared, and they will then demand or stop reducing their interest rates and keep interest rates a bit flat for a while until some of these ease pressures reduces. And then elections to the outlook is also another risk that we see. But overall, the trend for interest rates in our view is to decline generally as inflation and liquidity remain strong. Thank you very much, Ralph. I'll hand over to you in the event that we have any other questions to respond to. Thank you.
Okay, thank you very much, Courage, for that very detailed presentation, very technical. I think that for both of us on this call are not too technical. We appreciate the technicalities. What we would say is that we would like it to break it down. So if I could get it clearly, essentially what you are saying is that for 2024, there are a few things that we should expect. That inflation is going to drop over the course of the year. We are also going to, that's also going to impact on interest rate as well. So we're also going to see a drop in interest rates.
Precisely.
Also, government cannot borrow in the external market. That means that government is going to be heavy on local borrowing, which means that T-bill is going to be the only mainly the main channel government is going to support the domestic market. And so we should expect more activity with the treasury bill market, right? But I have a question.
Right, but let me add.
If government, so quickly, one question, if the domestic market, treasury bill will be the only domestic market for which government can significantly borrow, that means that should be able to drive interest rates to go up a bit, because government will need to decide the domestic markets to want to lend money to the government, essentially. So why are you also saying that you should expect a drop, considering that activity did happen in the government? And I would like to also state that on this call, most of us are not very finance people. If you could explain the layman's terms for us, we really appreciate that.
Right, sure. So thanks for the question. And I think that's exactly what I was going to add, that you are right by saying that we expect governments to continue to borrow heavily on the T-bills market. And when government is borrowing heavily on the T-bills market, that would cause interest rates to go up. But what we need to also add is that there is a significant supply of money on the markets currently. There is strong investor demand for government securities, like the graph at the top right corner is showing. And once there is strong demand, there are a lot of people who have money who do not know where to place the money. And the main option they see right now on the market is government securities or treasury bills. Then there is going to be sustained demand or continuous demand for government securities, even though government is borrowing on the market. And once there is more demand for government securities than even the government itself is borrowing, then the interest rates that you can quote the government will be in a strong position to demand that you lower that interest rate. Because even though government is borrowing strongly, you are even buying it stronger. And so if you are buying it stronger, government is in a position to say, okay, you really want it, then lower the price before I can take it off you.
Which means essentially the demand exceeds supply. And
precisely.
So that is what the rates to continue to drop, regardless of the fact that government is heavy on.
Precisely.
Yeah.
Exactly.
And like to encourage for all of us on this phone is that is so you can in this session. We have a team of financial advisors, experts in this business, and they will respond to your questions in the Q&A section. There'll be an opportunity as well to allow Q&A section, and when we get to all of these questions. Thank you very much, Coach, for your time. I encourage you to continue to be on the call. So when it gets to the answer section, and if there are any questions for Courage to respond to, he will do so. So we'll move ahead and allow for the portfolio manager. And this is the portfolio manager for the IC Liquidity Fund itself. So he walk us through the fund's performance of the period. That's what the strategy looks like, what the plan is, and why you should continue to invest within the IC Liquidity. And so at this point, I'll call on Obed to take over and walk us through the performance of the fund the period.
Okay, thank you very much, Ralph, for the opportunity to engage. And thanks, Courage, quite insightful. At this point, we'll give a few insights into what on the portfolio side has been happening. My very good colleague, Herbert, is with me today. He's also a colleague portfolio manager on the IC Liquidity Fund, who has been playing very good and useful role. He will be doing that together with me. But before he comes in with the presentation, I think as we have all observed, Courage has made some very good and insightful points that we can carry away from this meeting on the fact that interest rates is likely to be on a downward trend, inflation same. What would that mean for ICLF? Are we continuing the same strategy, or what do we do about the possible reinvestment risk in relation to declining interest rates? So these are very key questions that we need to get investors to understand. And I believe the presentation that we will run you through will seek to answer some of these questions. And when my colleague is done, if we need to add on, we'll do that as well. So at this point, I will give the room to my colleague, my very good colleague, Herbert, who's also a portfolio manager on the scheme, on the fund, to run us through that quickly.
All right, sure. Herbert. Hello, Herbert. If you could kindly share your screen and then walk us through.
Hi, Ralph. Sorry, I think I was just giving panelists access. So give me a few moments to share my screen.
So while we're waiting for Herbert to share his screen, I think that for most of us on the call, I mentioned as well that there's a Q&A section. So if you have any question, kindly note it down, put it in the Q&A section, and we would allow questions. So they are also upcoming, is that we'll walk you through some exciting features as well that we have as IC for all our customers and all investors. And so in the course of the presentation, we will walk you through, and we would encourage everyone to stay on the call to the very end so you don't miss out on all the exciting things to be talking about So I think MX is 3. We'll move to this.
If you can confirm if you can see my screen.
Yes, please, we can see your screen.
Okay, all right, cool. So good morning once again to everyone. And this is going to be a quick presentation on the performance of the fund. Courage has already given us some insights on inflation, on interest rates, and expectation for Q1, Q2, and even up to the end of the year. So this presentation is going to briefly touch on the fund performance and then what our outlook and strategy is going forward. Like I mentioned, Courage has already mentioned the decline in interest rate environment that we are seeing. So this chart is essentially showing the evolution of the 91 and 182-day treasury bill rates. So right from the start of this year, we've seen a decline of about 200 basis points across 91-day and then the 182-day bill. If you would recall in our PM notes, we did indicate at some point in time that we were staying off treasury bills. And one of the reasons was because rates were increasing at a rate that wasn't sustainable in our opinion and wasn't supportive of the fundamentals of fiscals in the economy. So we decided to take a more cautious approach to investing in treasury bills. However, this narrative has changed in 2024. And so on the back of declining inflation, we're seeing interest rates also respond to the inflation numbers that Courage has already highlighted. Now, the big story here for ICLF, we gradually started buying treasury bills for the fund. So again, when you go back to the PM notes, we did indicate that we're off treasury bills for some time, and we were mainly focused in repos. There are two things that have influenced our decision to pivot gradually back into treasury bills. And that's first of all, the decline in interest rates and obviously in inflation as well. And then the second bit is the inflows from IMF that came in earlier this year on the back of Ghana being able to secure a term sheet for bilateral debt negotiations with its official creditors. So those are some positive developments that have come through and support our view to gradually ease into treasury bills as an asset class. And again, with declining interest rates, what we've now started looking at is the reinvestment risk of staying off treasury bills. And so we've gradually started to buy a bit short to medium term treasury bills for the fund, just to ensure that we mitigate the risk of low returns whilst interest rates decline. So these next slides are just a brief overview of portfolio performance. Compared to 12 months ago, we've seen a significant growth in portfolio AUM. Size has grown by about 5.7 times compared to February of last year. And that's mainly attributable to the investment income that we've generated on the portfolio and also contributions that have been coming through. So your contributions as unit holders and our efforts to make sure that we generate sustainable returns is what is contributing to the growth and the AUM that you're seeing. The next slide is looking at the evolution of returns. So as of last year, December, we ended the year with 20.3% annualized. And again, in the last 12 months, the fund has generated over 7.4 million in investment income to its unit holders. So again, on the back of the fact that we took a more cautious approach to managing the portfolio, I know some people had questions about why T-bill rate at 27, 29%, and the fund was doing 20.3%. And again, it's just to ensure that at every point in time, we are generating returns that are sustainable and are also aligned with the mandates of the fund as well. So these are the returns for 31st December 2023. And as of February this year, annualized returns are around 22%. And we intend to continue exploring opportunities in the markets that ensure that returns are sustainable. At the same time, your capital and your monies are safe in the fund. The last slide is on asset allocation. So again, the big highlight here is you can see our allocation to treasury bills gradually increasing a little bit by about 10%. So we are comparing 6 months ago to today, and we can see the increase in treasury bills allocation. And like I mentioned, we've gradually pivoted into the asset class. So we are gradually increasing our exposure to treasury bills. So it's not an aggressive strategy. It's not an aggressive buying into the portfolio, but we are being mindful of a couple of factors as well as we continue to add treasury bills into the portfolio. The last slide is on our outlook and strategy for the fund. There are a couple of things that we have to bear in mind for this year. And again, Kari just touched on a few of them. So in terms of strategy, we are considering the performance of currency, our expectations for currency. We're also bearing in mind that this year is an election year. And so there are election fiscal related risk when it comes to investing in this landscape. And then we are looking at inflation as well, which shot up in the last print, surprisingly, and as well as interest rates and then policy action from the central bank. So these are a couple of macro driven events that could impact the performance of the fund, that could impact returns, and that would influence our strategy as portfolio managers for the fund. In terms of currency, like I mentioned, there have been inflows from IMF, and so that is providing some cushion and support on our FX reserves. However, we continue to monitor development on how currency behaves. And then with regards to elections as well, historically, election years have been characterized by some market volatility as well. So we are being mindful of those risks that come with election years. And then again, interest rates, inflation, monetary policy, they are all connected in one way or the other. And so last month's print came in a bit higher. Is this sustainable? Is this not sustainable? Is a question that we can't exactly answer. But again, Kari just explained that, with inflation, the outlook is that we expect inflation to decline over the long term. And so if that's going to persist over the long term, then we should see interest rates decline. And that would again influence our strategy to go a bit more long in terms of treasury bills, whilst we also balance the investments we have in other asset classes like repos and then fixed deposits. So in summary, our strategy is really hinged on these macro-driven factors, and we intend to keep a close eye on it, whilst making sure that we generate sustainable returns. We don't sacrifice returns for capital preservation or safety. So we'll be keeping a close eye on these cues. And then as and when developments are positive or otherwise, we would be adjusting our strategy accordingly. Thank you.
Okay, great. Thank you very much for that presentation. Thank you as well. Thank you very much for the presentation. So in summary, if I get with respect to the performance, what you're saying is that after today, the fund is returning around 52%. And the objective of the fund is that we want to make sure that at any point in time, funds are safe and secure and investors can have access to their money. And so we are not looking at an aggressive growth strategy in terms of returns. We are not chasing returns. And that the focus is to steadily grow, right?
Yes, correct, Ralph.
Hello?
Yeah, Ralph, I can hear you.
Yes, so I tried to summarize all that you said in terms of performance. Did you get that? I should go back again.
Your line was breaking a bit. You could recap quickly.
Okay, good. So as you did, what you're saying is that performance, focus that we want to preserve the money and grow it over time. And so we are not looking at an aggressive growth strategy when you are chasing returns, and that you are looking at growth funds steadily and also more sustainable, such that where investors want to have access to the money, funds are available for them to have access to it. That way I say just performance, right?
Yes, correct.
Okay, and also what we are saying in terms of the strategy moving forward is that we are considering all of the macroeconomic factors, and then also the fact that there's election in the year. We are looking at interest rates dropping us over that, as sorry, just told us earlier. Inflation also dropping as well. So the strategy is around how we work around all of these factors to get sustainable return that are appreciable by customers and clients. That's also why I see there is the strategy moving forward.
Yes, Ralph.
We are trying to summarize some of the technical language to make it very easy. Some of us on this call to appreciate what we are talking about. And so, Emmett, in terms of the currency, we've seen a decline in the cedi against the dollar. Today, that is around the dollar. I see the dollar around 13. Are we going to see a further decline in the cedi? And also, how would that impact on our investment? Because today the argument for most people is, if I have money, do I buy dollars or I invest it in the liquidity fund? And so, what would you say about that?
Okay, so I'll answer your second question first. Question as to whether to buy dollars or invest in the fund. What I would say is we have an experienced team over here at IC Liquidity Fund that is doing all of the research and analysis on currency expectations, on interest rates, and trying to ensure that we generate the most competitive returns in the fund. So we are keeping all of these macro events in mind. On currency expectations, yes, we've seen some weakness in the currency. And again, this is pretty much after IMF inflows have come through. But I think over the long term, what is mostly going to drive the performance of currency is interest rate, how Bank of Ghana or how the MPC manages interest rates going forward. Because in a pretty high interest rate environment, you see currency stabling down, or you see currency declining, strengthening, sorry, a bit. But it's largely hinged on how the MPC is going to be directing or ushering in interest rates over the next 3 to 6 months. In our view, we think that looking at the trend in inflation long term, we expect interest rates to decline accordingly. And so if interest rates are going to decline accordingly, then we should see some volatility in currency. We can't give you a hard stop figure as to where currency would end, but we expect some volatility in the next 3 to 6 months. But nonetheless, the fund is, again, having a team that is well experienced in keeping in mind the performance of currency, keeping in mind how interest rates are moving, and making sure that at the end of the day, wherever currency ends up, they are still better off investing in the fund as compared to making an outright decision to buy dollars.
Okay, great. Obed, last question to Ebert. I think we can also answer the question. Last question for you before we allow for participants also answer to ask their question. Is the fund also looking at hedging the volatility in the currency as you spoke about, in terms of if you are looking at buying foreign currency-based assets to sort of hedge itself against the volatility that you spoke about, that you're speaking about.
Can you come again with the question? I didn't hear you.
So I was asking if the fund is currently considering, because you spoke about the volatility in the currency, if the fund is currently considering buying any foreign-based assets to hedge itself against the volatility in the currency.
Okay.
Yeah.
All right. So I think Obed would take this question.
Yeah, thanks a bit. So it is something that has been in the pipeline that we are working on. I think during our AGM, we did indicate the possibility of we exploring the US Treasury and adding that on into the portfolio and other hard currency opportunities. I think this has been quite progressive. There are a few regulatory stuff that I think we are working around, and then we should be fine. So that is actually in the play. So as Ebert indicated, we are watching all of these indicators, watching how currency is doing, and how by exploring other hard currency asset classes, we can beef up and improve the return on the portfolio. So the answer is yes. So there is a strategy in place to explore hard currency opportunities that will improve the returns on their portfolio, which as an individual investor, it may be a bit difficult to access. You can, but it may be a bit difficult to access, but by being part of IC Liquidity, when those events begin to show up and we begin to explore those opportunities in the hard currency assets that are offshore, I mean, you also stand to benefit, right? So the answer is yes, Raf.
Okay, good. Thank you very much. So what you're saying is that the fund then becomes a tool for investors to take advantage of, to also hedge themselves against some of the volatilities as well, and also grow their funds steadily over the period. Thank you very much, Obed and team, for that insightful presentation. At this point, we'll allow for questions. What's going to happen is that we have about 260 numbers on this call. If you have any questions, I want you to raise your hand. You raise your hand, I would allow you to speak, to also interact with the portfolio managers and ask them your question directly as well. So we have Juliet, Kofi Nama, raise their hand. We have Musa Khalid also. So I'll allow we'll start with Kofi Nama. So Kofi, we'll unmute your audio, your microphone, so you can ask a question. So we'll start with Kofi Nama.
Okay, here. Hello, good morning to
Your,
everybody.
your microphone is unmuted, so you can ask a question. Okay.
All right, good morning once again.
You can go ahead, please.
Sure. Thank you for the
Yes, we can hear you.
Actually, it's my first time being on this platform, and then I would want to know what specific assets ICLF investing, what specific assets does the fund invest in? Because I get to understand that it's you're 20% into government T-bills, if I'm right. Apart from that, do you have other assets that you invest in?
Okay. All right. Is that your only question, please, Kofi?
Yes, that's all for now. Okay,
great. Thank you very much, Kofi, for your question. We'll respond to it. And we'll allow for Musa, and we'll take 3 questions and then we'll respond to them. You're asking, Kofi was asking what are the specific asset classes that SCP fund invest beyond treasury bills. So Musa will unmute your microphone and allow you to ask a question as well. Musa Khalid. Musa, can you go Go ahead and ask your question, please. Hello, Musa, are you ready? If you're not ready, we'll move to Musa is not ready. We'll move to Solomon. So Solomon, Solomon, microphone unmuted, please, and ask your question.
Hello.
I think Musa is ready now. Musa, can you go ahead with your question, please?
Good morning.
Good morning, Musa. We can
my
hear
question
you.
is, I want to know, at IC investment, do you pay for dividends?
You are asking if IC pays for dividends. If you could kindly be clearer with your
Yes,
question,
yes,
so
yes.
we could respond.
IC investment. Okay.
You're asking if IC pays dividends. Is that your question?
Yes.
Okay, I think
Yes.
I think that we're asking if the fund they're investing in earns you returns, of which you can have access to. Is that a question? Okay, if that's the question, then yes, the fund is invested in energy returns, of which you can have access to your principal and return at the point that you intend to withdraw. So if that's the question, then the answer is a yes. Thank you very much, Musa. I'll move on to Solomon. Solomon, can go ahead and ask a question, or mute your microphone and ask your question. Solomon. Hello, Solomon, are you ready? Okay, if Solomon is not ready, we will go ahead to Henry and then Benjamin Arthur. So Solomon, Henry, and then Benjamin Arthur. Solomon, are you ready? If not, Henry, you can go ahead and ask your question, please.
Hi, good morning.
Okay, good morning, Henry.
So my question is, noticing the scope of instruments that you mostly invest in, I don't know exactly what repo means, but I'm assuming it's something that you do quite well. And then we have the government securities that you also get into. Do you perhaps consider maybe international bonds or things in the fixed income markets out there in the near future, or even perhaps going forward? Is it something that we would have access to?
Okay, so you're asking asset classes whether the fund is doing or looking at foreign bonds and other investment as well. That's what you're asking? Hello?
Yes.
Is that your question? Yeah,
Yes,
I can hear you.
my
Is that
question.
your question?
Yes, please.
Okay, thank you. Thank you very much. We'll respond to that. I think that I asked that question earlier to Obed, and Obed explained that in the last AGM was agreed on that the fund will take advantage of some of it. So Obed will explain that into detail so that you get that. Thank you very much for your question. Benjamin Arthur. So this for Benjamin, if you can unmute your microphone and ask your questions as well.
Yes, hello, can you hear me?
Yes, please, we can hear you.
All right. So as he was speaking, he made mention of 22 the increase from 20% to 22% on the IC liquidity funds, right?
Yes, please. Hello, Benjamin. Hello, Benjamin, are you with us?
My question is,
Benjamin, I think that you've muted yourself. If you can kindly unmute to ask your question.
hello, can you hear me, please?
Yes, please, I can hear you.
All right. So I'm saying, he made mention of the increase from 20% to 22% per annum, right? And then my question
Yes,
is,
please.
assuming I have like 5,000 in my liquidity funds, right? And then I add up in the middle of the year or in the third quarter of the year, do I still get the total 22%? per annum, or it's different?
Okay, okay. So thank you very much, Benjamin, for your question. Is that your only question? Please, you will respond to that. Is that the
Yes,
only
please.
question, please?
Yes, please. That's my
Okay.
only question.
Okay, thank you very much for your question. We will respond to it shortly. I think we have iPhone. I'm trying to struggle with that because there's no name, but there's iPhone. If you can unmute yourself and then ask a question, please.
Hello.
Hello, we can hear you, please. If you could kindly mention your name, because we don't have any name.
Okay, please.
Kindly mention your
I'm
name
Joseph.
and then ask your question. You are
I'm I'm Joseph.
Joseph. Okay, Joseph, if you kindly go ahead.
Okay.
Kindly go ahead with the question.
I think depositing into your IC liquidity fund now, using mobile money, it takes up to 3 days before it arrives. So I'm trying to ask, are you doing anything to limit the number of days that it takes?
Okay, good. Joseph, thank you very much for that question. In terms of the number of days it takes for your mobile money payment to reflect, it's something that we are working on honestly to ensure that we're able to reduce the time it takes for it to reflect. Because if you look at how the scheme is structured, when the payment is made to the mobile money account, it needs to go there from the mobile money account into the scheme's account, the custody account, Standard Chartered Bank. And so, yes, it's true. We understand that challenge and that inconvenience from the side. And I'd like to assure you that we are working on that to ensure that we're able to reduce the time, the number of days from 3 days to probably get it instant purpose. But that is true and that is very good. Okay, so Obed, if we can let's speak to the few of the questions. I think three main questions for your team. In that, what are the specific asset classes, and also the scope of investments, and what international, in terms of opportunities within the international markets that the fund is looking at as well. And then for someone who's adding up funds in the middle of the year, how does the return look like for such a thing? So we'll deal with these three, then we'll allow for the next set of three questions, then we'll move on to the next one.
Okay, thank you, Ralph. I'll attend to these questions, and I'm sure the subsequent ones will come through. Right. So in terms of the assets we invest in, they are fixed income assets. So like we did indicate, we did mention of treasury bills, fixed deposits, and repurchase agreements. A repurchase agreement is more or less like a fixed deposit with some collateral in terms of treasury bills. So it's more or less buying a particular security at a particular rate and agreeing what the future price will be. So both ends of the transactions are locked in that market volatilities and the likes do not actually impact the return at the end of the period. So a typical example is, let's say you do an agreement to buy a paper and hold to earn an interest of, let's say, 20%. So that is priced. So given the period that we intend to hold that paper, which is, let's say, a treasury bill, you hold that paper for, let's say, 6 months or 2 months or 1 month, and then it is what it is. If it is 20% per annum, that is what it is. So it's more of a structured sort of instrument that we use to hedge against interest rate risk. And that was very key somewhere last year because of the rising interest rate trend. And even in these times, it will still be an option that we'll still explore because aside interest rate risk, that also minimizes our issuer risk on government side. So those are the sort of security that we invest in. And to tie it with a question on whether we explore international treasury instruments or bonds or fixed income instruments, yes, we do. like I did indicate, this is something that is part of the list of assets that we are considering investing in. So typical is the US Treasury. US Treasury because the US Treasury is highly rated in terms of its safety. And for a liquidity fund like this, where safety is key, the US Treasury is also noted for it's very liquid. The market is very liquid, multiple times liquid than even our local market. So that is an instrument that if we intend to play in as a hard currency asset, will be very useful given the mandate of this portfolio, right? So yes, that is something we are looking at to benefit on the currency side and to provide some sort of currency hedge and to build some resilience into the ICLF portfolio. And then, as I said, that also gives you the opportunity to have some foreign exposure where as an individual maybe you may not be easily to do that, but being part of the fund with all these dynamics in place, it gives you a more solid diversified portfolio that you put your money into, right? The only thing is that we have not gone full scale on these external opportunities yet. There are a few things that we are doing in-house and then on the regulatory side. And once all those things are checked, I mean, we are good to go, right? So basically, these are the areas in terms of the various assets that we are investing in and we consider to invest in. Now, on the question on rate 20 to 22 as whether that will continue to be the rate that we earn on the portfolio. If we observe from the chart that Herbert showed, you saw the return was evolving. So it's more or less an evolving rate. It's not static where it is 22. So it is 22 for the whole year. At every point in time, we look at a year to date return. So assuming we come again in a month's time or in 3 months' time, you'll see a year to date return maybe from the past 12 months. That is likely to change. And what we have observed is that the current return on the portfolio is more upward evolving. So it's going up. So it's more likely, I mean, the coming months, you're likely to see the interest rate go up. So that if you have your fund in at some point in the future, it's likely to be earning better than what it is earning today. But let's all bear in mind that this portfolio is a mark-to-market portfolio based on what happens on the market in terms of the price of the assets or the securities we invest in. That is likely to impact the return negatively or positively. So these are not guaranteed, what we call it, returns. And as professionals, what we intend to do is to, like Herbert have been emphasizing, give you sustainable returns. So you see that even in this trend of declining interest rates, we are still maintaining the momentum of the upward trend in the returns that we offer you, right? So we are doing much to protect you on the market side on terms of risk, which is why we will still explore things like repurchase agreement until the economy is fully back and then we see some level of stability because all the background that we have given and with the current status of the economy, if some of these risks should begin to heighten, we would then have to reconsider our strategy and all of that. So it's a holistic thing that we are trying to do to make sure that we continue to give you a steady return and also protect you against necessary the potential risks that you're likely to face. So that is it to answer in terms of what the returns would look like going forward. Yes,
Okay.
I believe this
Yeah.
captures the questions.
Yes, please. That captures very well. Thank you very much, Obed, for the question. And also to all of us on this call, I'd like to encourage us that because of time, we would move on to the next part of the conversation. However, if you have any questions, you can send us an email at clientservices@ic.africa. And if you have any questions that hasn't responded to, you can put this in the Q&A section or send us an email at clientservices@ic.africa. Or you can send us a WhatsApp message on 0552557789 or give us a call on 030-825-0051. We'll type all of how you reach us in the comment section so you can pick it up and be able to tell. So we'll move on to the next part of the conversation. as an organization, and also to ensure that at every point in time we are serving our clients' needs. One of the requests that we've had from scheme participants is that we've typically had questions about whether IC has an app, and how are customers able to access that. Yes, we have a web portal, world.ic.africa, which is available to everyone who has an account with Login. What we've done at this point is that we've gone further to introduce an IC World app, which allows for all our customers, for everybody here who already has an account and able to log in on the web portal. Now you're able to download the IC World app and do all the transactions and all the interactions, and be able to check your balance, the statement, all of that, all the things that you're able to do on the web. Today, you are also able to do that on the app. And so at this point, we are introducing the IC World app to everyone. We have Mario on the call, who will take us through briefly how the app looks like, what you look at for, how you're able to download the app, and also how you're able to log in and also interact with the app. So at this point, play a quick video for everyone to see how the app works. And Omari, who's on the call from our tech team, will speak to it briefly so that we can also download the app and start to experience the app as well. It's worth to mention that the app is currently available on the iStore. Very soon, make that available on the Play Store as well for all Android. And so, Omar, you can take over from here and walk us through the app.
To download the app, all you need to do is to go to your App Store or Google Play Store and search for IC Wealth. Then you should see our logo in the results down here, and you can then click to install the app.
After downloading the app, you only need to log in to access the app and its features. For existing users with an account on the IC World web platform, logging in is easy. Just use your email and password or phone number and password, the same credentials you used when you first created your account. If you have trouble remembering your password, you can simply click on the reset password button, enter your email address, and then follow the process. For now, I'll log in. For added convenience, you can activate biometric login during the login process, making it easier to access your account each time. Once you are fully logged in, you have full access to all the features you have on the app. You can go to your IC Liquidity Fund and then add money. All you need to do is select your payment type, a payment option, and the amount you want to invest. You can easily manage your portfolios by transferring funds between them. All you need to do is select the transfer funds option. Then you choose the portfolio from which you want to transfer funds from and the portfolio to which you want to transfer funds to. Then you select the amount you want to transfer, and then you submit and your funds are transferred that easily. You can also as easily withdraw money whenever you need to. All you need to do is select the withdraw option. Then you select the portfolio from which you are withdrawing money from. You select the amount you want to, you input the amount you want to withdraw. And then for those of you interested in trading, you can simply click on the trade live section, click on any equity and you would be seamlessly redirected to the web platform where you'll be ready to trade. For our latest insights and research pieces, you can go to the Insights tab and filter based on your preference to get any insights you want. If you need to get your statements, you can simply open the sidebar, go to the Get Statements tab, and then choose the range for which you would want your statement. However, if your statement is beyond 30 days, we will process it and email it to you within the hour.
Okay, Omari, thank you very much for what last week with you. But just to walk us through the app as well, to summarize everything that Omari has taken us through, that what we are saying is that when you download the app for an existing customer, when you download the app, you don't need to go to registration. You just have to go to login. And your current login details that you use to access your account on the web, that you use the same login details to log in onto the app. If for any reason you've forgotten what your login details are, you can do forgot password, and then you go to the reset password process, which will be sent to your email. You go to that process and create a new password for you to get in. Also, when you are getting in, there would be a regular two-factor verification process to ensure that we have the right people with the right accessing the account. And so that process will also be done. In the app, you'll be able to see your account balance, your liquidity fund, and also you can also trade. That's buy shares, all of that. If you are also interested in doing that, we are giving you the opportunity to be able to do all of these financial activities on your fingertips, wherever, whenever, with the app. You are able to do all of these activities. Within the liquidity fund as well, we've had many questions, people asking that I have a liquidity fund account. What if I want to invest or save towards a particular objective? Maybe I want to buy a car, I want to pay, accrue money for my rent, all of these other things. Do I need to create another account, another liquidity fund account to you? No, what we are saying is that in the app, you can also create a goal in the account. You're creating a sub portfolio, you can create a goal, and then you have that as well aside the main liquidity fund account. You can invest. So let's say I have an account for a car, create an account for buy a house. All of these things, you're able to do that and then invest it. Mine was explaining about switching, transferring funds within the account. And so that is what we're talking about. Where you have different goals within this the fund that you are investing towards, you are able to also switch funds in between as well. So that's what the app allows you to do. And then also you can set up your automated payments as well through that as well. You can through a bank, or through your Visa card or your MasterCard. If you have a card, you can use that set up automated payment as well. One of the things I would like to encourage all members of the fund to do is that we would encourage you to automate your payments. That is, set up a direct mandate where the money will be deducted from your bank account into the scheme, because if you are not able to keep up with the monthly payments, or you want to pay as a win, or sometimes you just forget, we'd like to encourage you as well to set up a direct mandate such that every month is deducted from the account, and you determine the amount, you determine the period for which you want it to run, and whichever bank that you bank with, we are able to help you set it up. If you're having any challenge setting up online or on the app, as I said, you can send us an email at clientservices@ic.africa, and then we will be ready, available to assist you. Or you can go on our landing page, world.ic.africa, send us a message through the live chat section, or straight to speak to an advisor, and then we will pick it up and help, just so that you're able to have access to it. I think that at this point, what we are going to do is that we are going to take We are bringing the kettles, we are bringing the meeting to a close. So I'll take closing remarks from, and then also we will wrap up here. If you have any question, your question hasn't been responded to, and because of time, I would encourage you to put it in the Q&A section. We'll respond to it, or send us an email at clientservices@ic.africa, and we will also attend to you. Or what you can also do is go on our landing page, world.ic.africa, send us a live chat, and then we'll interact with you. So closing remarks, we'll go to we'll wrap up. Harry, are you with me? If not, we'll start with Obed and Ebet to give our closing remarks.
Right. Thanks very much. Okay. I think that it's been a very insightful discussion. I've enjoyed it thoroughly myself, and I hope our audience also did. And we've all learned a thing or two. We've all also taken lessons about where we are headed. We've also seen the strategy for the year. We've also seen also that there are risks to the outlook, which can either impose costs or benefits on us. And so we are guided by the presentations and what we've learned from here. And we hope to keep it going over the course of the year for our mutual benefits. Thanks a lot for having us, and have a nice day ahead. Thank you.
Thank you very much, Courage. Obed, closing remarks from you before we go.
Okay, thank you, Ralph, and thank you to our cherished clients and potential clients, everyone on this call. We appreciate you. You have given us the opportunity to manage your cherished and hard-earned money. And I mean, we will do our best to employ the best of tools we have within our disposal to continue to drive sustainable returns on this scheme for everyone, and also ensure that anytime you need your money, you can easily access it, and your safety as well.
Thank you very much, Obed, for your time. I would like to say a big thank you to Obed and Courage and Herbert for joining us, and Omari as well for joining us today for this conversation. As investors in the scheme, at this point, I think that we are informed, we understand clearly what our portfolio manager and team are doing towards ensuring that our funds are safe and secured and are being grown sustainably and steadily as well. I'd like to say a big thank you to all our participants for making time to join us on this call. We apologize for the delay in starting, and also for going beyond 20 minutes. However, we believe that it's been a great conversation. We've all enjoyed the discussion, reason why we've been stayed on to the very end. Our next investor call will be coming up in the next quarter. So in the next quarter, we'll have a session like this again. Our plan and our focus, our target is to ensure that we are able to meet with our investors at least 4 times in a year. Every quarter, we have an interaction like this where we're able to engage with investors in the fund, and also allow them the opportunity to speak to the portfolio managers directly as well. And we hope that on the score, we've been able to achieve that. Thank you very much for your time, and we'll see you again at our next investor call. As I said, if you have any questions you want to interact with us after this call, you can send us an email or give us a call. Send us an email at clients@ic.africa. You can go on our landing page, world.ic.africa, and you can send us a live chat, to interact with the financial advisor, and then we can help you as well. If you need any sort of investment, you want to have any conversation with us as well, we have a team of experts who are available to assist. Thank you very much for your time. Have a wonderful afternoon. See you again next semester. Bye-bye.
I see an Africa that's focused, on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa.
Hello, Obed. Can you